Coming to you from the floor of the CME Group, I'm Eric Wolfman Wilkinson. Let's get in the zone, the cash money zone. It's Thursday, ahead of tomorrow's big WASDE report. That's going to be coming out tomorrow morning at 7:30. We've got an early opening in the grains right now. 7:20 tomorrow for this report. Now, what's expected? Well, there's so much negative sentiment coming into all these numbers that even if we are coming in right at those numbers, there's so many longs in the market, they're using that opportunity to get out. Right now, what we're seeing over in the grain market is a lot of people are trying to put on positions to cover their downside, give them protection for that, because there's record longs in there. We pushed down, like I've talked about this number several times, 730. That's where basically the funds and all these longs have had to start covering with either buying puts or trying to sell their futures against some of their long positions to get hedged ahead of this number. We're also seeing the vol. I talked about that yesterday. D's and March vol are up around 28. We're starting to see that rise. What does that indicate? It doesn't necessarily indicate that we're going to go higher, but it does indicate that the market sentiment is that there's going to be a very large move in the next couple days, which, having this report tomorrow, that is a logical assumption. Now, which way are we going to go on this? I think that what is happening is the beans are actually looking pretty good, despite the fact that the beans have been having a lot of support today. Corn, I think, is actually going to come in a little disappointing, but that doesn't change the fact that there is a lot of technical stuff going on in the market. Corn still looks like it's really heavy, wants to test this $7 range, but right here yesterday, when we got below that 630 area, we saw, or 730 area, we got into the 720, 725-ish. That's where we saw a huge amount of volume happen. Today, we're still trickling down a little bit lower. We're in the 717s-ish. It looks like we really want to test that $7 handle, and if we get much lower to test that $7 handle, it looks like that 676 area where the gap is from the July 4th holiday is going to get covered. Beans is the same thing. There's a gap there from that July 4th holiday that probably will have a tendency to take care of that. Now, on into the equities. S&Ps, we've seen this sell off, which is good for the market. You have to have some market sell off in order to rejuvenate the rally, and that's what we're starting to see. We've seen that market come down. 1428 is a value area low. What does that mean? It means basically 80% of the time and volume has been spent between, or that is the bottom end of that 80%, 1428. So once we've gotten above that, we've seen a lot of the bulls get kind of rejuvenated, and we're going to start pushing higher. Now, I don't know that we're going to see the 1455 today, but 1455 is still the pivot where the time and value has been spent. So most traders see that as the value and will have a tendency to migrate towards those levels. But right now we're in a technical kind of pattern. I still am on for my year-end projection for the equities. There's just too much bearishness right now. Too many people talking about how the stock market is overdone and that there's a pending crash. Now, when has there ever been a time in history where the crash was called by so many people? Well, it's not. Usually when everybody's calling for a crash, the market continues to jam up against them. So look for that to continue to happen towards the end of the year. The more the bears come out and start screaming and yelling that we're overbought, you can pretty much assume that the contrarians are going to win. All right? If you can't take that, take it easy.